Hello and welcome to another chapter on US taxation. So after completing the 1099 taxes, this is a very important topic which is home office deduction. And this has gained importance very significantly over the past couple of years, specifically after the COVID and during the COVID as well, because a lot of people were actually working from home, and specifically for the consultant, gig workers, and the freelancers who normally use their home as an office. So all the expenses which they incur specifically to manage their office from their home can be claimed as a home office deduction. There are multiple rules to it. There are some simplified rules, and there is some rule which is based on the calculation. Actual expense method is there, simplified method is there, and then how the percentage of allocation is being done. So all this and much more than how these information is being linked with the form 1040 and Schedule C, and all this information is like cascaded to the multiple forms, and then finally what is being reported into Schedule C. So we'll talk about all this and every aspect of the home office deduction in this particular chapter. So let's move for the next slide and look at the agenda. So the key agenda that we're going to cover as a part of this chapter is that we'll quickly look at the introduction to the home office deduction. We'll see the evolution that how this particular deduction evolved over the period of time. What is the test that is being performed by the IRS? Because this often creates a dispute when person claims more deduction than that is eligible. Home office and the Schedule C integration, we'll talk about this. Home office and the self-employment tax, we'll also talk about this. And then finally, the deep type of form number 8829, which is largely for cases wherein the SSC or the person has adopted for the calculation method. Then we look at the practical case study, which is like again the calculation method and actual expense method. And then we'll spend some time in understanding some of the key takeaways from this particular chapter. So let's move to the first slide. Okay, so now we'll talk about the main concept, introduction to the home office deduction. So home office deduction allows eligible taxpayer to deduct certain expenses related to the business use of their home. This is very important. Now, when we talk about the business use of their home, first of all, we need to understand what does this mean, and then definitely which class of the taxpayers are eligible to get this kind of deduction. So the most valuable tax benefit is largely for the because this is being done by people who are having their income other than the salary. So kinds freelancers, consultants, independent contractors, gig workers, and the sole proprietors in the small business owners. Now, when we talk about home office, what does that exactly mean? A home office is designated area within the residence that is used. First important, exclusively for the business purpose. This is very important. So exclusive use of the portion of your residence for their office purpose is one of the preconditions to claim its deduction. Secondly, the regularly for the business activity. It should be regular as a principal place of the business in the many cases. Example, a dedicated office room, a home studio, consulting workplace, or a virtual business operation center, administration office, or the remote business manager. Purpose of home office deduction. The deduction helps the taxpayer recover the cost associated with operating a business from the home, which means that any costs being incurred to operate the business from the home is being covered under this particular home office deduction. The key objective is to reduce the taxable business income, lower the self-employment tax exposure, reflect the legitimate business operating cost, and support the modern remote work business models. So in today's economy, many business operates entirely from the home, and the common users are freelancers, consultants, content creators, digital marketers, software developers, online educators, and the e-commerce sellers. Uh, this helps them to reduce their Schedule C profit because all this reduction is going to impact the deduction, and then deduction is going to increase if this is being claimed. It reduces the taxable income and may also reduce the self-employment tax levy. IRS eligibility, so to qualify, the taxpayer generally must satisfy there are three tests basically that we discussed above as well. First is the exclusive use test. So space must be used for the business. Regular use test, which is being that business activity must occur consistently. This is very important. It has to be consistent business activity. And the principal phase of the business test, which is that home office serves as the principal and the primary phase of the business operation. Two methods are there. So simplified method wherein standard IRS rates per square feet, and the actual expense method, which is the allocation of the actual home expenses. So simplified method is very simple. It allows the maximum annual deduction of 1500 per year. But actual expense method is deduction based on the rent, mortgage, interest, utilities, insurance, property taxes, depreciation allocated according to the business use percentage. And we'll talk about this in detail as we proceed further in this chapter. Because home and the business expenses often overlap, a common IRS concern includes the personal space claimed to be a business expense, inflated office square footage, and the insufficient documentation. So typically, this happens when a person claims the deduction on the basis of the actual expense method, and the typical scenarios are basically they are not using the designated place, or they are mentioning that place as being used, which is more than it is being used for the uh, office purpose. So which means that more area has been claimed to be used for the official purpose, which otherwise would have been used for the personal purposes. And then documentations are not sufficient so that this deduction can be claimed cleanly. And these are the area wherein disputes is being raised by the IRS. So home office deduction has evolved into one of the most important deduction for today's remote and the self-employed workforce. So understanding eligibility, calculation method, and documentation require essentials to maintain the tax saving and while fully compliant with the IRS regulations. So we'll move to the next slide and see at the evolution of this home office deduction. So we are going to talk about evolution of the home office deduction. So home office deduction has evolved significantly over the years as work's environment shifted from the traditional offices to the home-based business and the remote work models. Today, it is the most important and widely used deduction for freelancers, consultants, small business owners, digital entrepreneurs, and the independent contractors. So if we'll quickly look at the evolution and look at the year by year transition of this particular deduction. So in pre-1917, which is the early IRS approach, initial tax settlement, home-related expenses were generally considered as personal expenses. IRS concern was that a taxpayer could potentially convert personal living expenses to the business deductions. So which means that very limited home office deductions opportunities were there. Introduction of the sticker rule. So in 1976 Tax Reform Act, a major turning point within Congress introduced the Internal Revenue Code, Section 280A. Purpose was to establish the clear rules governing business use of the home, deduction eligibility, and the documentation required. So, which means that the home office deduction become available only if specific qualification tests were satisfied. Traditional qualification era in 1980 to 2000 was three major IRS tests was there. So basically, exclusive use test, regular use test, and the principal place of the business. And IRS focus was to prevent the abuse while allowing the legitimate business deduction, because there was a potential that somebody would misuse the act and can claim the higher deduction. During the 1990s and 2000, growth occurred in the consulting business, online business, freelancing, independent contracting, which results into increasing the number of the taxpayer qualified for the home office deduction, which created the common problem. So taxpayers struggle with the complex calculation, expense allocation, depreciation rule, extensive documentation, and hence the IRS requirement also increases because it increases the audit complexity, inconsistent calculation, and frequent filing errors. So in 2013, there was simplified method that got introduced, wherein IRS introduces simplified home office deduction. And the calculation is $5 per square feet, which is the maximum of 300 square feet maximum deduction is being given. So which means that $5 per square feet, 300 square feet area, which is designated for the office purposes, which sums to $1,500 on an yearly basis, which can be claimed as deduction. So benefit as easier calculation, reduced paperwork, and the lower compliance burden. The evolution of the home office deduction reflects a transformation of the workforce from traditional office environment to the today digital and remote economy. Understanding the history helps them to explain why IRS continues to apply strict qualification and the documentation requirement, just to make sure that the deduction which is being claimed is genuine and for the official purpose only. So we'll move to the next slide. Now we'll quickly discuss on the concerns which IRS were always having, and why they were having concerns. Those were largely because of legitimate reasons, because people tend to claim more deductions or claim deductions which otherwise would largely be used for the personal purposes. So before claiming the home office deduction, a taxpayer must satisfy that IRS specific qualification tests. And what are those? So first is the exclusive test, which is the most critical test. Then exclusively for the business purposes. IRS focuses every occasional personal use can jeopardize the qualifications, which means that if it's dedicated consulting office, then yes, it is qualifies. Guest bedroom of used occasionally for work, no. Home studio use only for the content creation, which is yes. Kitchen used for the business administration, which is no. Regular use test, that is most important. The home office must be used on a continuous and recurring basis. Qualifying example, daily business operation, weekly client management, and the regular book office activities. So these are some of the areas which requires the regular usage of a particular office space for doing the office activity rather than a sporadic or a one-time activity which cannot then be classified as the uh, expenses that can be claimed as a home office deduction. So non-conventional expenses are occasional homework, temporary projects, sporadic business activity. Principal place of the business, which is like the home office, must serve as a primary location where the business activities are conducted. So what are some of the qualifying situations is that administrative activities, home office used for the building, scheduling, accounting, and business management. No other fixed business location. So taxpayer performs business operations primarily from the home. Multiple business locations. The taxpayer may still qualify if the administrative and management activities occur at the home and no other fixed location performs these activities. So which means that there is dedicated specific activity which is managed from the home, while rest of the activities is managed from the other location wherein offices typically taken on the rent. Specifically, IRS exception is that daycare facilities exclusive use rule only will be relaxed for licensed and daycare operators. Inventory storage, certain business storing inventory may receive the special treatment. However, there are some high-risk situation as well. So, wherein like shared family office space, large percentage of home claim, no documentation, personal items dominating office area, home office claim with the minimal business activity. So, the IRS qualification tests are the foundation of every home office deduction claim. Most audit issues arise due to the calculation error, but the not from the calculation error, but from the properly satisfying the document that these qualifying requirements which requires to claim the home deductions are available. So which means that the person who claims the deduction, that person has to maintain all the documents so that whenever these are required by the IRS for the scrutiny, those can be produced so that the home deduction can be claimed without any hassles. So we'll move to the next slide. Okay, now we'll talk about another important section, which is the business use percentage calculation. So under the actual expense method, a taxpayer cannot deduct 100% of the home expense unless the entire home is used exclusively for the business. There is a concept of business use percentage. This percentage determines how much of the rent, mortgage interest, utilities, property tax, insurance, maintenance cost, depreciation can be allocated to the business. What is the business percentage? So typically, we have if a person has a home of 2,000 square feet and home office is being done from 200 square feet, then this the 200 divided by 2,000, which is the percentage that will be allocated. That will be largely a 10% area. Then there is an alternate method. If it is not based on the room size of the property, then business rooms by total rooms is another method through which that allocations can be done. So direct versus indirect expenses. Direct expenses, which is like specifically exclusive for the purpose of business, that can be claimed directly without and any challenges, and it would be 100% to the business. Indirect expenses is largely basis the allocation method that can either be the basis the area or the basis the room percentage that we just showed. So which is like rent, utilities, property taxes, insurance, and the mortgage interest. So business use percentage drives nearly every home office reduction calculation under the actual expense method. Small error in measuring home space significantly impact the final reduction, making the accurate documentation and the calculation is extremely important. So we move to the next slide. Now we'll talk about another important section, which is the integration of home office reduction and the Schedule C. So home office deduction does not directly appear in Form 1040. So instead it flows through the Schedule C, and from Schedule C it flows into the profit and loss from the business, which actually Schedule C actually has the profit and loss from the business. Deduction ultimately reduces the net profit, taxable income, and self-employment tax exposure. So home office expenses, which is like Form 8829, which is largely being used if actual expenses method is used. If it is simplified method, that is not require any form. So Form 8829, the information flows into Schedule C, and from that Schedule C, it flows into Schedule SE. From Schedule SE flows into Schedule 1, and then finally the information flows into Form 1040. So simplified method directly reported to Schedule C, no Form 8829 required, but for actual expense method, calculation is performed on Form 8829. We'll talk about this in detail in the upcoming slides. Schedule C impact is that the gross income minus business expense is equal to net profit. Form 8829 integration actual expense method requires Form 8829 basically use the business use percentage, direct expense, indirect expense, and depreciation. And output is transferred to Schedule C. So understanding the integration between the home office deduction schedules is critical because this deduction does not more than the simply reduce taxable income. It is directly lower the business profit. So this in turn reduces the self-employment tax and improve the overall tax efficiency as well. So we'll move to the next slide. Okay, now we'll discuss the impact of home office deduction on the self-employment tax. So one of the most valuable benefit of the home office deduction that it is not only reduces the taxable income, it will also help reduce the self-employment tax because it actually lower the business profit, and then the calculation of SE is largely on the business profit by applying a percentage method. So by this method, most important reduction provide the income tax savings. So tax benefit is income tax reduced, and it also reduces the self-employment tax. So home office reduction, Schedule C business expense, reduce the net profit, Schedule SC, lower the social security tax, lower the Medicare and form. Basically, the impact, if it is impacting the business profit, then it has the cascading impact on lowering the Schedule SC, which is like lower the security tax and the lower the Medicare tax as well. So self-employment tax begin with the Schedule C net profit. So important principle, every dollar deducted from the legitimate home office deduction, lower the Schedule C profit, lower the Schedule SE tax earning. So if my profits are getting reduced with the help of the home office deduction, then it is directly impacting my SE taxes. Why the saving are significant? Because a home office deduction creates the triple impact: lower Schedule C profit, lower the self-employment tax, and lower the adjusted gross income. So simplified method reduces the taxable Schedule C profit. Actual expense method reduces the Schedule C profit, and both methods lower the SE tax exposure. This is very important. Many taxpayers focus only on the income tax benefit of the home office deduction. However, the real value comes from its impact on the SE as well. So by reducing the profits, the deduction lower both the Social Security and the Medicare taxes, creating a significant overall opportunity to the taxpayer. So we'll move to the next slide. Okay, now we'll talk about the form 8829 deep dive. This is important form when a person is claiming the deduction. This is the actual expense method. So form 8829 is used self-employed taxpayer to calculate the actual home office deduction. It allows the taxpayer to allocate home-related expenses between the personal use and the business use. The purpose from 8829 helps to determine the allowable home office deduction, business use percentage, direct and indirect expenses, and home depreciation deduction carry forward. These are like four sections. So allowable business deduction, direct expenses, home depreciation, and the deductions carry forward. So part one is the business use percentage. So business use percentage is basically the percentage that is arrived. This is the calculation that we discussed in the previous slides, which can either be on the basis of area or the number of the rooms. So that is the part one, which is like business percentage. Information required the business percentage, for example, 10%. Part two is the allowable home office expenses. So home office expenses, 80 to 9 separates the expenses into direct expense, which is like apply 100% of the business expenses. Example, office painting, office repair, dedicated office improvement. And second is the indirect expenses allocated using the business use percentage. Example, mortgage interest, rent, utilities, property taxes, insurance, etc. Part three is the depreciation calculation. So homeowners only taxpayers may deduct business portion of the home depreciation. So portion of the total depreciation and the application of the percent allocation, this is the calculation that was done above, that depreciation would be applied to that allocation percentage to calculate the total depreciation that can be claimed. And last one is the carry forward of the unallowable expenses. So if deduction exceeds the allowable limits, certain expenses will be carried forward. Common carry forward are excess utilities, excess insurance, depreciation amounts, important only available under the actual expense method. If somebody is claiming the simplified expense method, then these actual expenses cannot be claimed. So form 8829 is the engine behind the actual expense method. While it requires the more documentation and calculation than the simplified method, it is all often generates significant larger deduction and can be create a meaningful tax saving both for the Schedule C because it reduces the profit, and then definitely it lower the SE taxes as well, and adjusted gross income as well. So we'll move to the next slide. There. Okay, so now we'll talk about the practical example of this particular schedule. So we are taking the taxpayer profile as taxpayer is like business type is free IT lancers. Filing status is single, business structure is sole proprietorship, reporting is through Schedule C. We'll talk about the home information. So total home area is 2500 square feet, dedicated office area is 250 square feet. So we'll apply the percentage and we'll calculate the percentage is the 10%. Step two is we'll sum up the total actual expenses. So expenses are there, which sums up to 31,000, and the business portion is 10% of the same, which is like 3,100. So total direct expenses assuming it is 100, 1300. So total direct expense 1300, and then we have the indirect expenses as 3100. So we have the total expenses as 3100 plus 1300. Then we'll also do some calculation for the depreciation. So we have the purchase value of 450,000, land value is 100,000, building value is 50,000. Assuming 10% of same is the allocation, and the depreciation business basis is 35,000. We'll assume that total depreciation for that particular is 900. Step 6 is the total home office deduction, which is 3,100 is the indirect expenses, which is 10% of 31,000 total indirect expenses. Direct expenses 1,300 and depreciation 100. When we sum up all these, the total expenses claim is 5,300. Assuming the gross revenue is 1,20,000, other business expenses is 45,000, then the remaining home office deduction is 5,300 is going to reduce my total Schedule C profit, plus it also helps me to reduce the SE tax as well. So SE tax reduction can definitely be reduction in the SE levy approximately by 472 by applying the percentage method, which is like 93 or 95%, and then applying the 50%. So that's a different rule basis the SE taxes. So typically objective here is to showcase that how home office reduction helps to reduce the Schedule C, and then Schedule C, when it is reduced, it has a direct impact on the reducing the AGI, and then it has the impact on reduction of the SE taxes, which is being paid by the individual in the form of the Medicare tax and the Social Security tax. So with this, largely we covered this home office reduction, and we'll quickly move to the next slide, which is the final slide, wherein we are going to understand some of the key takeaways from this chapter. So some of the key takeaways when we talk home office reduction is a powerful tax saving tool. That is very, very important. Allows eligible self-employed employed taxpayer to deduct the portion of the home-related expenses used for the business purposes. Particularly valuable for freelancers, consultants, gig workers, and the sole proprietors and the home business owners. Exclusive test is there, regular use test is there, and the principal pays. These are the similar typical tests which is being performed by the IRS to evaluate whether the reduction is genuine or not. A business use potential percentage is critical because actual expense method relies on the formula. This percentage drives the rent allocation, utility allocation, insurance allocation, and the other common expenses which is being allocated to the home office deduction. Form 8829 is used to calculate the business use percentage, direct expenses, and the indirect expenses. And then home office deduction is typically from 8829 to Schedule C to Schedule C, and then to Schedule 1, and then finally to Form 1010. So home office deduction is much more than a simple expense claim. It is a strategic tax planning tool that can impact the Schedule C, Schedule SC, AGI, and the overall tax liability. So with this, we'll move to the final thank you slide and see what is it that we're going to cover in the next chapter. Okay, so we come to the end of this chapter. So I think with this chapter, we largely conclude the aspect of the self-employed individuals like consultant, freelancers, gig workers, etc. And we have looked into all the possible aspect basis which they have to file their respective incomes and showcase that what amount of taxes they have to pay. Now we are going to start another chapter, which is investment and the capital gain income. We'll come with that chapter. Then we understand that how investments are going to earn income, and then how capital gains are calculated. So we'll come up with this chapter very soon. Until then, stay tuned. Thank you. And